Hello and welcome back to Smart Analyst Global. It's been a long time, yeah. It's been a very, very long time. But yes, I've been saying I'm going to do this for a long time. I'm like, let me just. I spoke with a friend this evening and she triggered me to start. So I'm basically just going to start it. Those that have been following the content or following our community, you know that we have a trading product which we call STIC, STIC, stand for Smart Trading and Investment Companion. So I had to focus the last close about 3 years to automate the stick. That is, make it such that you can be able to trade automatically. It's going to do trading on your platform, on your trading wallet, on your exchange account like Bybit and Binance automatically without you giving anybody your funds. So the money remains with you, and you connect. All you need to do is connect your exchange like Bybit and Binance to MoneyGrow. We call the name MoneyGrow, MONIEGRO.com. Yeah, you can check it out. It's not open to everybody. You need an access code for you to be able to access it. But yes, it is live and it's functional. For those that in the inner circle, you probably have been saying, might have been getting the signals and I mean getting the updates about it, right? But if you're not, you can reach out if you're interested. I mean, the gate is still open, so access is kind of is free and actually open right now, so you can get to test it out and see the performance. I was on a Twitter space last week, and somebody mentioned something about the bear market, and I realized that I was kind of biased in my comments, and his comment actually made me realize that I need to go back to the chart and see it clearly. And one of the things that's immediately after the Twitter space, I went to the chart and I did some analysis, and I looked at Bitcoin from the onset, from the dinosaur age, right? And looking at the projections, the reversal after the bull run. So we mostly don't categorize this 2013 as a bull run, right? It's more or less the first bull run. But one of the things you notice is at the first bull run we had what? The retracement after the bull run, after the peak was 87%. So if I keep driving it backward and we do the retracement for 2017 bull run, retracement after the bull run was what? 87%, 87%. You can see almost equal. But there's something we call the law of diminishing return. And that is what I see happening in the next bull run, right? If you look at what we experienced in 2021, right? Looking at the 4-year cycle, the deviation that is after the peak, the maximum deviation is currently raining here. I'm not sure if my mic is going to be picking the noise from the rain, but let's see how that goes. Maybe we'll be able to filter it, edit the video out, but this is it. So if you see what we have here is 77.838. Let me see. I hope my sound is clear. So if you check it out, we have 77.38 retracement, about 77% retracement. You can notice what we have here. The first 13 we have 87 retracement, 87%. We have 87.71%, and now we have 77.38%. And bringing us 2021 was the previous one. Then this is the peak of the last bull run, and after the halving, right, post-halving run. Basically, I think the best thing is to call it post-halving run, not even bull run per se. So post-halving, and we have this. We have 52.57% retracement, about 52% retracement. So where I'm in hindsight, what I'm trying to say is that I expect the market to, I expect the retracement to be reducing over time. That is, we've been having 87, then we have 70, we have 77. The next one I expect it to be around 60 or 50 something, which I think we've already done about 50 something percent already. We've already done the retracement of 50 something percent, and I think we're still bullish. When I say bullish, yeah, we still have that bullish potential in the sense that the market is. So this is the Bitcoin cycle high and low indicator. It's actually free. You can check it out. So you can see this one. It was able to predict the high, and now it was able to predict the low and the crossover. You can see this is the third halving, Bitcoin halving. We predicted the high. This was the high, but note that after predicting the high, the market still went to create a new high. Then predicted the low, the market still went back and created a new low after that predicted the low. So it's not 100% accurate, but it got the bullish phase, that is the bull phase. It got the prediction right. When the market entered the bull phase, it was correct, and we got the fourth halving. So it's something about the fourth cycle, always something about the fourth cycle, that whenever there's the fourth cycle, things always change. So if you have a pattern that's been repeating the first, second, and third, most likely the third, fourth time is going to change. The pattern is going to change, and I think that is why we are currently having what we have right now. And we have the fourth Bitcoin halving. This is the current peak we have, 125k region, but I think, and we've already retraced back. You can see we're already back into the bear market zone. Looking at what we currently have here. So what I said on the Twitter space then, that I don't think we're actually in the bear market. So I think that was a very, very wrong analysis, a very wrong comment. And I was wrong on that. I just wanted to correct that. I think I'm probably on the next Twitter space I'm going to mention it. So one of the things I didn't actually check it, but I'm looking at the chart, right? Oh, come on, I'm too fast, right? Let me slow down. Because looking at the chart right now, I'm trying to learn how to communicate. So I'm going to reduce my speech. So if you check out the, let's just look at progression right now. You can see the market is uptrend. We've already broken structure. This is a valid change of character. I remember calling the shorts. We stick actually called the shorts then. I remember calling the shorts, and we add the shorts. But the market is currently dancing around the low SMA of the what's it called, the cycle high and low predictor. So you can see this red line. You can see when we break the leg line, that's like the valid. That's what basically validated that we are currently in the bear market zone. So we're currently in the bear market zone. Prediction to know how long it's said below the red line. But what you want to see is how long was the bull cycle before the market actually tried retracing back into the bull trend. But looking at the, you can see I'm going to switch on to stick, using stick. So stick, so that was the short I was talking about. This was the buy, right? And the reason I want to switch to stick is because stick already have some moving averages I want to explore, like the yellow, the market flip line, that's the yellow line, the blue line, which is the market support and resistance line, and the green line, which is the market, this is the bull and bear market band. So this is the bull and bear market band, and you can see that market is currently holding above the bull bear market band. And looking at here, you can see this is where it broke below the bull market band, and the market danced around it for a long time, consolidated, accumulated before breaking back. The same thing happened in the last bull run, did it? Yeah, we broke below it, accumulated, then broke, but that's this green line, accumulated and break back upward, and that was the continuation. So if you go to what we currently have, the market has broken below it, bounced back upward. It's currently consolidating around it right now. And what are the expectations? I made a call a few weeks back that if the market actually rejects the 82k region, which I know it was going to reject, so that we're going to actually continue downtrend, and that is currently happening right now. You can see this was the rejection, the market went back, this was the line, and it rejected the 82k region, and it's currently bouncing downtrend, but there's a potential that it's still going to come back to 85. There's a possibility for that, but if you look at what we're currently having, if I'm using moving average alone, you can see that the market is currently trading below the flip line. So that's it kind of bearish, but this is like the major support right now. This region is what we have as the major band, where we can say is the accumulation phase. Yeah, let me just call it the accumulation phase before we get the last leg. So currently we are dancing in the bull run. Like I said, it's still a long time. If you're going to be buying Bitcoin, this is not whatever I'm doing, analysis I'm doing right now is not a short-term analysis for long term. So you can see that I'm currently on weekly time frame right now. So it's for long-term analysis. So what I'm expecting for Bitcoin is actually to come back to around the 68k region. And when it comes back to that region, if you're going to be buying for a long time, you should accumulate around that region. I'm not saying you should buy everything, because there's a potential it can still come down below. Anything can happen, it can come below. But looking at the way institutions are currently accumulating Bitcoin, and looking at what their major liquidation price is, I think the market is still going to, is basically just going to consolidate time, because we have a lot of liquidity around here. You see, we have a number of liquidity around this region. Let me just draw it for you. This is this a major point of interest. This region, that's between the 49,300 to 74,300. So we're currently trading around this region. So there's a potential the market will come sweep below 49k. So there's a potential the market can dump below 49k and bounce back up. Yeah. So that could happen because we have liquidity regions already. We have stop loss. We have traders that enter the trade around this region and they put their stop loss around this region. So there's a potential the market will still come back and sweep it before going up back upward. So what I'm saying is this could happen. Where are my pattern? These are possibilities. So I'm not ruling it out. Like I said, the market is just all about probabilities. So it's a matter of you measuring out your probability and seeing what could happen. So what I'm saying is, because this is a point of point of interest. Point of interest, right? This is a point of interest, right? There's a market and can still come back and sweep the liquidity below the liquidity zone here and go back upward. But that on this other side, right? What I'm saying is that we, at least within the medium time frame, we're still going to come back towards this region, towards 69k. I'm going to come back towards 69k, then continue uptrend. Because yeah, if you're probably looking at it on a market structure level, smart money concepts, if you're actually projecting smart money concept, right? You're going to be seeing that we have a breakout here. This is a break of structure, and whenever we have a break of structure, the market will mostly come back to the range to peak liquidity. So that's what I'm saying, the market will come back to this region to peak liquidity. And looking at whenever we have a change of character, the market will also come back towards the uptrend. So we already have a change of character that took us bearish, so the market might still retrace back upwards to the downside. So we're still expecting at least this not a perfect V shape, but some V shape recovery. So maybe towards our 130, 200, or wherever everybody has been calling, right? We're still going to get there, but I think we're still going to get there, but it's going to take some time. So the bear phase, the kind of correction we are expecting has changed. The market dynamics has not really changed per se. I won't say it has not really changed, because if you look at the patterns, the pattern actually followed each other. You can see the market come back towards the bull market support line and held it and bounced back up, come back again, dance around the bull market support line, break below it, reject it, break below it again, then bounce back up, and we'll still be expecting it's currently around it again. This is the gray line, dancing around it, and potentially we'll still bounce back up and continue uptrend. And that is the long-term expectation. So if you're going to be buying Bitcoin, you're probably buying for a long time, not for short term. So that is what I am saying here, and that's what I predict. And like I said, we might not have up to 77% retracement. We've had 52% already. Maybe max will take us, let's say if it takes us towards 96, so that will bring us about 60%, 61% retracement. Probably close to this region, so it's 1% retracement, correction, the market bounce back up, and we're back again to our bull run. So that's my expectation for, that's what I'm seeing. Actually, that's what I'm seeing. And let's see if I can make predictions in terms of heights. Can I? Let's try that. Let's try that from the low to the highest. This is about how many percent? 2000. I don't. So another thing, like I said, law of diminishing returns. If you look at the first bull run, that was the one in 2017, right? The last, I think I participated in 2017 bull run. I'm still going to make some videos about how I lost my money in crypto anyway. You can see we had 9,000, we have 9,946% run. The next one was what? 2,175% run. Then this one is what? How many percent? If I look, I think I will need to look at, calculate the diminution. So you can see here, the last bull run, we had from 9,000 to 2,000 to 600 and what? 688%. So whatever the leg you're expecting right now, let's assume this is the lowest price. We're going to be expecting Bitcoin to go higher again. So if it's going to be from 9 to 2 to 6, wait, let me just do some calculation here. Let's do some math. So the percentage deviation from here to here is actually about 244%. and for that's like the from 2017 to 2021, from 2021 to 2025, that is 82%. You can see, and let's say we have the same uh, reduction. So the peak, the next bull run peak, might actually be around one. Yeah, you can put it to around one. Let's say 130 to 180 max 180. If we put it at 180, that means the run. Let's say from the peak, from the base. So from the base is going to be giving us about 198%. Yeah, 198%. So that means you're buying your Bitcoin right now, you're probably going to be making about 190% on it if you buy at the base. If you're able to buy the lowest, which are about 60K, you're going to be making about 198% profits at the next in the next run. So, which is one of the reasons why we have some valuable altcoins that you want to like. Okay, what is the projections for each of these altcoins? I have some of them online that I'm already looking at. Maybe I'm going to be making a video about them later, or I'm going to drop a comment about them in the community. But this is what I'm saying, and I think the next run might probably just take us to closer K Bitcoin, then retrace back up to. Like I said, there's what we call logarithmic projection. So in the log mode is where you're going to see a lot of things pan out. You will see that the peak is always getting lower and lower and lower and lower and lower. So basically, talking about the law of diminishing return, the momentum at which the market was growing is going to continue reducing going forward till everything mostly just trim out. So you can see potential is going to be reducing going forward, reducing going forward. So let's say the next peak could be around the next phase, take us to 200, bounce back again to 123, take us to 600, bounce again, then probably take us to $1 million. Probably before we get to $1 million, right? It's going to be we're going to be eating about maybe 2030, around 2030 to 2030 something. I'm just projecting right now. You might eat it before now. Anything can happen. The government spending, government printing can come on board, and everything will just go like that. But I'm just projecting right now that probably it's going to take us about 2034, 2030 something before we probably will say Bitcoin is eating about $1 million. But these are my projection on Bitcoin, and these are things I'm expecting to see, right? So these are not financial advice, by the way. In case you're asking, it is not a financial advice. These are just what I'm thinking, what I'm seeing in the market, and I feel like I should share. Right. So it's up to you to make your decisions to make the impactful decisions on what you want to do. It's still up to you. So that's what I see on Bitcoin and what I expect would continue. So like I said, the law of diminishing return is setting in. Whatever you're going to be making going forward is going to be getting reduced. Right, it's going to be reducing going forward, and you want to ensure that we're prepared to probably diversify or edge your portfolio. So like I said, just to do a recap, I expect the market to come to this region. And come back to around the 670K region. So market's done back to about 70K regions. If we hold it, then we're still probably going to bounce back. But if this 70K region breaks, that is, if 78K breaks, then I expect the market to come back to sweep below 50K or around 50K. Then before we go up, that's my expectation. But right, these are what I'm saying. And like I said, stick is already shorting. We've been shorting. If you're this is currently 1 week time frame. If you're on a lower time frame, you'll have seen the short. Maybe on daily time frame or 4 hour, you have seen the short earlier. So that is how it works. If you want to, I'm going to be making some other videos to probably explain. So like I said, I'm hoping to be more active in the space, to be more active in giving content. And because if you find value in the video, don't forget to like and subscribe. If you want to analyze another asset for you, drop it in the comment section. And thank you so much for liking. Thanks for watching. And please do like, subscribe, and share with your network, share with your friends. Interesting. We value every feedback we get. And thank you so much for all the feedback we've gotten over the years. We thank you for all the feedback we've gotten through the boring phases, through the bear market and the bull market, through the trading cycle. all the feedback you're giving us on Stick. I mean, I so much appreciate everybody that gave us feedback on developing Stick, feedbacks and the errors we see, then we get a fix on the go. I really want to appreciate everybody on this call, and I'm going to be seeing you on the next video. I'm going to maybe, I don't know when that will be, but I'll try to make it as often as possible, right? I'm going to try to make it as often as possible. So see you in the next live, and don't forget to trade. Don't forget to trade smartly. That's very, very important. Very, very important. Don't forget to trade smartly. Don't forget to apply risk management in everything you do, and see you next time.